Hey everybody, welcome back to the channel. It is time for an update on Facebook stock, and we need to talk about Facebook stock. Now, what has happened with Facebook over the past month? Well, they absolutely crapped the bed when it came to their earnings report. I bought around 10 shares of Facebook, averaging at around $325, because at the time I saw the price and I was like, massively undervalued. I thought Facebook should have been at least like a $450, $500 stock, just given the pure numbers. And I did a review on Facebook before I bought it a little bit earlier in January. I'll leave that in the description, but Facebook was just screaming undervalued. Facebook puts out their earnings and they show one key metric that pisses off investors. And like there were two things that pissed off investors, but one of the main things pissed off investors, which is their daily active users went down from like 1.95 billion the quarter before or the year before to 1.93 billion. And as a result, that slight miss in daily active users of not growing at the level investors thought they would grow. Granted, 37% of the entire population on Earth already has a Facebook account, right? So it's a little bit hard to keep growing if you already have that many people. That showed investors that there may be an attention problem here for one of the biggest companies in the world that's business model is predicated on keeping people's attention. As a result, the stock drops. We hit lows of like 219. It lost $250 billion in market cap. It seems like it may take a very long time unless there is a massive bull rally. And given the macroeconomic dynamics, I have no idea if that's ever going to happen, at least for the next 6, 7, 8 months, maybe even a couple of years, for Facebook to get $250 billion in market cap back into the company. When investors sell off the stock at that high of a level, that's not retail investors. Those are institutions that have percentages of Facebook, realizing that they can allocate that capital to better opportunities, whether it's smaller cap stocks, growth stocks that have the potential to actually grow, whereas Facebook might be peaking, or other large cap stocks that are more stable to invest in, like an Amazon or a Google, even though those have their own host of problems. But nonetheless, that is why investors sell off the stock. So Facebook has kind of fallen off a cliff. Now, people have been asking me about my conviction. See, the tricky thing here is I only bought 10 shares, so I'm down $1,000. And in the grand scheme of investing, being down 1,000 is not that crazy. You could sell it to take it as what is it? You could tax harvest that $1,000. You could say, it's like $1,000 is not really what I'm concerned about. I'm more concerned about the truer question, which is, do I buy the dip? Right? Do I load up on Facebook at an even juicier price? Because if I liked it at 330, I don't know why I shouldn't like it at 219. Or is my conviction struggling? And I'm kind of 50-50. And I think most people are 50-50 on this. My conviction is struggling the more I learn about the problems that Facebook is having and the more due diligence I do in terms of seeing where their growth potential is. The other thing that investors hated was that it lost $10 billion last year on their virtual reality labs, which is not going to make a lot of money for a long time. I mean, this virtual reality stuff, they're not going to be able to monetize at scale, at least for the next 5-6 years, because to monetize that, you've got to build a headset. You've got to get people using that headset daily, and then you've got to get advertisers that want to advertise within that headset. I mean, this is a very difficult thing to do. That's why when I made my bull case on Facebook, I was like, I don't care about the metaverse. I could care less about that. I care about the numbers with the ads business. And the ads business is crazy. Facebook made $33 billion last quarter, not year. Twitter makes like a couple billion a year. Facebook made $30 billion in a quarter in terms of their ability to monetize their user base. So I was just like, that's just screaming to me that it's a buy at that point. And a lot of people were like, oh, you should have bought Google instead of Facebook. Google had a massive run up. Two things. One, the stock split increased the massive run up. And by the way, I love Google. I'm super bullish on YouTube. My thesis for Facebook over Google was that Facebook doubling to be a $4 trillion company versus Google doubling to be a $2 trillion company. I definitely messed up the words. Google doubling to get to 4 trillion versus Facebook doubling to 2 trillion, to me made more sense to go with Facebook given their ads business. So the stock split really increased Google's ability to actually be able to be able to get that run up. And number two, Google's all the way back down to like 2,600, 2,700. So it's like it couldn't sustain itself given the dynamics. That's why I think anyone saying like, oh, you should have put your money here versus here, it's like, let's give it a little bit before we definitively say that you could have made an investment here or here, because there's still macroeconomic pressures that might bring these prices and compress these valuations all the way back down. The problem is Facebook fell off a cliff, and in this market, not falling off the cliff and just staying where you are is better than losing a lot of value, because it's going to be harder to get it back. So my conviction was never the metaverse. My conviction was the ads business, and right now I'm struggling to see, is the ads business enough given the other forces they have to deal with, which is Apple and relying on Apple's platform, and TikTok, which is a major competitor at the end of the day for attention. Now, I wanted to do two things in this video. I wanted to explore two perspectives from CNBC. These are guys that I generally like listening to. One guy is Josh Brown, who's a contributor trader, and the other guy is Kevin O'Leary. Kevin O'Leary is buying the crap out of the dip, and Josh Brown is like, I don't see the potential for it to increase. So let's take a look at these two perspectives. Let's react to them, and let's ultimately conclude on which perspective has a little bit more merit going forward when it comes to Facebook stock. So this is the bull case, which is Kevin O'Leary.
And I'll tell you why I did buy more. Last time we were talking about this, I was talking about the fact that Meta is actually owned by sovereign and institutions, not retail investors. Many retail investors own the stock, but the majority of this is held institutionally. This is a classic FANG. It is very rare to take a company this size of this market cap down 30% in a drawdown during a series of trading sessions. That doesn't happen very often. So here's the investment thesis. I was trying to figure out, and I want to be totally transparent about this and understand that there's always risks, but I recently became an Emirati citizen. I'm a citizen of Canada, Ireland, and now an Emirati. UAE, I want to do business with them. I want to work with them on indexing. I want to work with them on infrastructure buys all around the world, and I want to invest beside them. And that's why I was very fortunate. But I also want to hear what those managers think about these massive positions. And I was working with them this morning. There's such a time difference that we're on very early in the morning. The question is this: when does Facebook, now Meta, get re-indexed? In other words, it started at 5 to 6% of these big mandates. It was one of the core holdings.
When he says mandates, he's saying that these institutions had a 5 to 6% mandate that Facebook should be 5% of the fund, which is why when the sell-off happened, Kevin O'Leary is saying is that institutions were like, let's reduce that 5% to like 1%, which is where you got this massive 30% drop after earnings. So he's arguing now, when are they going to reload back on Facebook at just a cheaper price?
It was being drawn down by the hundreds of millions of volume. You've seen it happen over the last few trading sessions. Have they stopped? This is my bet. This is the bottom. They've stopped. They're down at 2.5%. I'm not just talking the Emirates. I'm talking about all of the managers that work in Dubai and Abu Dhabi. These guys control a ton of money. And so people are calling for $200 price. Ain't going to happen. This is my investment thesis. You have to believe in Zuckerberg to turn Reels against the other applications. But this is the bottom. This is where you want to accumulate. My call.
So that's sort of Kevin's argument, which is that Reels is Facebook's attempt to monetize at a different level. Now, it's very important to understand, if you're a Facebook shareholder or interested in the stock, how they monetize. They monetize through advertising, but there's certain mediums by which those advertisements come. Either you have Instagram, the feed. That's a very popular way to advertise. You have the Facebook feed. That's a really popular way to advertise. You have sponsored posts on like the side of the page. Or you have Instagram stories, which is also really powerful because people are flipping through their stories and they get a piece of content. It doesn't even feel like an advertisement. It's engaging, captivating, gets their attention. They click on it. There's an ROI for an advertiser. Now, for Reels, that is their competition to TikTok. That's their answer to TikTok, because TikTok has innovated this short form vertical video medium of content that everyone, I mean, including Netflix and YouTube Shorts, right? They've all copied it. So at that point, all these companies are copying it. That means people's attention in this day and age is on this short form video. Instagram copied that with Reels, and Facebook also has Reels. Facebook has not monetized Reels at the level at which they could monetize it, because it takes them about 8 to 9 months when they introduce a new product to monetize it in a way that actually allows advertisements to be meaningful for advertisers and beneficial for users that are experiencing those ads. So Kevin's argument is like, all right, they're going to monetize that. And when they figure out monetization on Reels, there's going to be a much better chance for growth potential, along with the ability to actually monetize where the majority of attention is being spent on the platform. And he also believes that Zuckerberg is one of those operators that is going to be able to figure it out.
Number one, do you think a metaverse will emerge primarily driven out of gaming? Yes. Will there be a need for a curated metaverse so that the big brands can put up their virtual sites and advertise there without being beside a porn shop? Yes. What's the largest platform on earth that could provide a curated metaverse? It's Facebook. Okay, right there. That's an assumption. Number two, the yield drop. The Apple change in their operating system caused the ad yields to drop. There is no question about it. I've lived through it myself. But there's all kinds of companies emerging. One of them is called C² Social, small advanced, using AI to combine credit card data with Facebook data to get your yields back up. And Facebook itself is fixing that problem. If you don't think they have a bunch of engineers working on enhancing yield on advertising, you'd be wrong. Okay. Number three, they're not bad people. They're not immoral people. That's crazy. These people support small business in America, and we are using them. Nothing's changed. They're still over 50% of our advertising dollar. Where else can you get billions of users and have pretty well every state using it for geolocked advertising? And Reels is coming to fight off the attack from TikTok. So, and I also think the regulatory environment has changed overnight. because all of a sudden Facebook doesn't look as strong as it did just 6 weeks ago at beating everybody up. TikTok was eating its lunch. They're going to try and fix. They're going to try and compete and push back the government in terms of regulation. Now is the time to own this stock. It's a call. I could be wrong. However, I think the big guys, as we started this conversation, have finished flushing the toilet. They've re-indexed it, and now you can find, you don't have to put it all to work right here. Start to nibble. And I'll say it one more time, this evil stuff, evil people stuff, ridiculous.
All right, so that one was really interesting to sort of talk about. So there's a couple of points that Kevin brought up that I think are really important. Number one is that a metaverse is going to emerge and there needs to be a curated metaverse. Now the question is, if billions of people are spending their time in the metaverse, if we think this is the next generation of the internet, what platform has billions of people on it? Facebook might not be that platform in the future. There might be another platform that replaces Facebook that amasses billions of people to create their curation of the metaverse. But it's kind of hard to assume there could be another platform that could have billions of people at the level of Facebook, given the network effects that Facebook has, right? So it makes more sense that there's a seamless transition between Facebook to Meta, which is why they made the name change, for a metaverse to emerge, because they have access to all these users and they can create a curated metaverse. And we know Facebook is good at creating these curated experiences, given the level of usage that they have on their platform. So that's sort of the first argument. And the second main argument that Kevin is making, well, two main arguments. One is this, they're fixing the ad problem. So like the ad yield drop, right? iOS did this app tracking thing that changed. A lot of people said, no, I don't want to be tracked. That means Facebook ads weren't as effective anymore. That problem will be solved. I mean, Kevin's like, look, there's a bunch of startups working on this. There's a lot of technology. Facebook is paying like hundreds of millions of dollars to engineers to fix this problem. So we're going to fix this problem. That's going to be better. My pushback to that would be, what if Apple does more changes in the future that keeps messing with Facebook? And that's why Facebook's trying to kind of get away from Apple and make their own hardware and stuff. But nonetheless, yeah, if Facebook solves that problem, then ROI should be going back to advertisers, which means more advertising should be coming into the platform. And number three is that where else are you going to advertise? And this was my bull thesis on Facebook. It's like there's 3 billion people. There's tons of small businesses that are all geo-targeting their customers. So if you're a small pizza stop or a small dance studio and you have your own dance business and you need to get customers to know about you so you could get them into your studio. I mean, I ran a small business before and I ran Facebook ads. I mean, it is incredibly powerful, and it's the only platform on earth that allows you to attack people immediately and get their attention and actually build your business. I mean, you can't build a business without marketing, and that's the nature for why I felt so bullish on Facebook, because my argument was, where are advertising dollars going to go outside of the biggest platform in the world that has all the users and that's going to be able to give you a meaningful ROI? So that's the bull case on Facebook. And obviously there's reels coming. Let's look at the bear case on Facebook by Josh Brown.
The first is, they have never taken on a competitor as big as TikTok. And big, I mean by users and mind share and market share. They've just never had to do it. You have to go back to 2008 when they're fighting MySpace to ever see Facebook in this position where they're not the incumbent, right? Like when they fought Snap, and some would argue when they beat Snap up, they were so much bigger and had so many more resources, and they were already the gorilla. They're not the gorilla with Reels. And they keep emphasizing that Reels is the future, the next big advertising platform. Okay, maybe, but not yet. And TikTok very much looms large in their minds. They talked about TikTok incessantly on that call. So we haven't seen them fighting from a disadvantage in a really long time, not since they've been a public company. That's one. Two, if this was a normal stock in a normal time, Carl Icahn would already be in here giving this kid the business. But he can't, because Zuckerberg has 360 million Class B shares, which are the voting shares, and then he controls another 32 million via partnerships with other shareholders. So essentially, he's got all the voting power. Nobody can really do anything about him. If Icahn were able to come in here, or any activist for that matter, the smart thing to say would be, okay, the crown jewel here is Instagram, maybe even WhatsApp. Let's break this thing up already. Let's put an immediate end to all of the government stuff all over the world. Let's put an immediate end to all the inquiries and all the antitrust and all the GDPR stuff in Germany. Let's just end it. But they're not going to do that because the kid is an empire builder. And now you have openly economic ministers in Europe saying, we're not letting you transfer data back to North America from Europe anymore. And if you don't like it, you can cease operations in our country. That's what's going on right now. So it's a very challenging situation as an investor because you don't know which shoe is going to drop next. So normally, a stock this big, a company this successful, there would be a real bounce at this point. But it's not normal. There are very many abnormal problems here, and I just don't see those clouds dissipating in the near future, which is why I'm not racing in with my wallet open.
All right, so let's talk about some of those concerns. I mean, those are valid concerns as well, and that's sort of what gets me thinking more on the bull case for Facebook. So it's like his first argument is Reels is not monetized yet. We'll see if that happens. You have to trust Facebook can do it. It's like, okay. The second argument is that because they have competition from TikTok, it's a question of if they're going to be able to sustain attention and grow attention, because this is a company that needs to grow. The irony is, you know, they were at 330 when they had 1.95 to 1.93 billion daily active users. Now, if they go down from 1.93 to 1.91, they're already down 40%. So what, are investors going to sell it off even more? Like, that's the hard thing. And I could theoretically imagine them selling it off more, because that's 2 quarters of consecutive non-growth. So it's like, just for them to get back to normal, for me to break even, they would have to get to 330, right? Which means what? Do they need to grow by like 30% over the next couple years? It's like, what does it take for this thing to rally anymore? And I think Josh is pointing to the sort of inconsistency that we have with user growth in relationship to the competitors that exist for attention. Number 2 is this entire idea of a metaverse. There's already regulations and governments, literally people in Europe or regulators in Europe are actually telling Zuckerberg to leave. They're like, I think the world would be better without Facebook. So they're getting fed up with it. They think it's toxic now. Is that going to happen? No, because so many people in those countries use WhatsApp and Instagram that those countries would explode if those apps went away. So it's like, that's not going to happen. This is a little bit more posturing. But that means that there is an ESG concern. And the question is, can you build a metaverse as a company that has such an ESG concern in relationship to everyone else? I mean, people just don't like Facebook, right? Kevin O'Leary, I would say, is in the minority of people that talk so nicely about their advertising business and small businesses. I agree 1000% with them, but I do think the vast majority of people think that Facebook's in the past, and they don't think that Facebook necessarily is going to be the future. That's where I think there's a buying opportunity, though, because I like being contrarian here and saying, no, you guys just believe some stupid narrative, but this is where people's attention is being spent at the tune of 3 billion people every month. I mean, that's pretty insane to me. So the question here, if you're a bull on Facebook, you have to believe that this metaverse will be a thing, and until it becomes a thing, they will figure out how to monetize and grow users at scale. And because they have fallen down so precipitously from their previous market cap, there is a potential world in which they can actually buy some companies now, because you can't say Facebook's a monopoly. I mean, if Facebook went to buy a company at a $600 billion market cap, I think it would be ridiculous if regulators were like, no, that's not possible. It's like, do you know how many competitors Facebook has? Amazon made $30 billion last year in advertising. Facebook made $30 billion in 1 quarter, right? So, or Amazon did $30 billion last year in the quarter. But regardless, $30 billion is just a tiny part of Amazon's money, and that's advertising, and Facebook's entire business is advertising. So it's like, it's hard to say that Facebook is like the only place where you can advertise when there's so many other places, and the numbers are backing that up. And like we can see it in how other companies are monetizing. So at that point, if they're able to actually buy some companies, that would be phenomenal, right? That would be great. But if they're not able to buy companies, they have to do this all organically on their own. Do you trust that Facebook's and Zucks will be able to do it? And that's the question I'm struggling with. It's not a question of can they monetize Reel. It's not a question of, is the metaverse going to be a thing? It's a question of how long will it take for Facebook to actually figure out this problem, and how much do the indexes that Kevin O'Leary is talking about have faith in Facebook now that it's really nearing its bottom, to the point where they're ready to invest in it and not let it go down to 200 because they understand how undervalued the company is given their growth rate potential and given how much they've been growing, and giving that the stock price really doesn't match the reality of what's actually going on in the company in terms of how many people are using the product. That's what I'm struggling with. I have like a small $3,000 position. It's like $2,000 now. So if I sell, those $2,000 could be allocated in a better spot. That's the reason I'm thinking of like, is it possible to sell? Because those $2,000, if I put it somewhere else, does it have a better chance to grow before I break even on Facebook, right? That's my argument. Or is this buy the dip? And I don't know yet. I think these are the two sides. I would like some advice in the comments, some thoughts in the comments, but I don't fully know if it's time to buy the dip or if it's not time to buy the dip. I am very excited for Facebook. I think Facebook has a lot of potential given this price is so unbelievable for the nature of what this company is. But is this company becoming the company of yesterday? Is this company becoming the Yahoo that they eventually displaced because the world is just changing? I don't know. I want to sort of have more conviction on this. I want to do a little bit more research on this, and I want to be able to figure it out. But these are the two bull and bear perspectives that are really crucial to think about when you're trying to evaluate what Facebook could be in the future. So that's it. Those are my thoughts on Facebook. Let me know your thoughts in the comments. Looking forward to read them. My name is Mitt. I'll see you guys in the next one.